Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for Tuesday, the 15th of October, 2024 at 6:50 p.m. Central Time. Well, today was Donald Duck Day. No, I mean Donald Trump Day, excuse me. And he had his interview on Bloomberg. And, it started off, you knew where you were when he said right off the bat, his favorite word in the vocabulary is tariffs. Bingo. Then he took the host. And he said that the host had never been right on any of the predictions he's made anyways, the host. And it started the whole thing. But once you got through the comic part of it and so on, you see exactly where he's going if he wins the presidency. If you want to do business with America in the most simplistic terms, your market goes open to us. If we're open to you, you're open. If not, we're going to tariff, and we're going to keep tariffing, and not to a point, and he made this clear, he said, not a 10% tariff where it just comes into our coffers, big tariffs. To the point where you want to build in America, and you can sell your products then because they're American-made. Gives you an idea. Today, the break happened in the chips because the Biden administration yesterday, I think I covered this last night, said, we are reviewing in a big way where these chips that NVIDIA and other of the high-end chips are going. They don't want to find they're going to countries that set up data centers and then America's enemies get into those data centers via agreements with that third-party country that those other countries make. So it's getting even more complicated as you go. ASML missed big on its bookings numbers, and that added to this. So you went down in all the chips. Okay, the problem is that's for the export. You can't produce enough chips to satisfy the numbers that NVIDIA's got out there with its Blackwell. And that means this is a temporary break. It's not a real rupture in the market. As we look at the gold and the silver, stabilizing. I think that's the right word. Copper, as you know, has been under pressure ever since China was a major disappointment. Tomorrow, we're going to get the mortgage bankers' numbers. They can't be good. All interest rates have been doing is going up. I mean, people could be getting desperate and just say, I'm locking this in before they get any worse. But as interest rates are rising, you shouldn't be generating business. The September import-export price data is at 7:30, and the API numbers are going to come out, and they're going to come out at you at, 3:30 in the afternoon, and they're a day late because of Columbus Day. Grains got hit pretty good again, and I'll keep saying it. This is the time of the year where the farmer is out there as long as he can be into the evening, lights on, and they're getting the corn out of the field, the soybeans. You're now into fall weather. You get moisture. You don't know when the first hard frost or snow is going to come, so the rush is on to get it. You don't need too much moisture on the crop, so you watch. Speaking of moisture, the big question is what weather patterns are forming in the Pacific. There's a lot of talk that we're going to get weather patterns that create much needed moisture this year, switching away from mild winters to wet winters. We'll see if that's the case. I think Thursday's when the National Weather Associations will come out and they'll give us an idea of what they've got there in the Pacific. Dollar, very stable here. Most currencies down against it. The Mexican peso got hit today especially hard. When we look at the S&P on a weekly chart, as you know, I use this rule of thumb. When the market's over an 18-day average, I have a bullish bias. When it's under it, I've got a bearish bias for that slight period of time, and it keeps me going with the market with the way that I have the overall picture that I want to be with. And this is a market that just keeps rallying on to new highs. When we take a look at the daily bar chart, the pattern is one of higher lows, higher highs. From my school, and I do have a school of trading, courses on it, that's a bullish trend. When you look at where the market's at, in order to get back to the 18-day average, you would be getting through the last break low. So if you go down there, you neutralize the market, you don't turn bearish. I want to make that clear. Right now, the bears are in no control. The bulls are in control. The market had a big, strong move on a Monday. According to Yale Hirsch's book, The Trader's Almanac, you often get a Tuesday break off of that. You exactly got that today. Does it work all the time? Nothing works all the time. But it's a very high probability, and it's a very good thing that I have used 40 years. I had Yale on my show, TV show, many years ago. Market up, coming down. I look for the market to have support at that 58.05 level. And when I look right here, it is a market that did not embed. So you have an overbought market that's gone up to the Bollinger Band, didn't have the power to embed, and you could slip back to that number at any point. Am I bearish? No, I'm saying you could slip back. Same thing happened in the NASDAQ. You got up here, you faltered at the upper Bollinger Band, and you're already pulling back to the 18-day average, trying to figure out what next. Remember, you're only 3 weeks from the election as well. When we take a look at the micro minis, you got higher lows, higher highs. Look how the market's starting to pull back. As you look right through here, again, an overbought market at the upper Bollinger Band begs for profit taking. When you have the Russell, you had a market that's now gone from the lower band to the upper band in 1 week. It was beaten up. It's come back into its own. Its own doesn't mean it's bullish. Its own means it's not going down again at this point in time, and it's acting a bit stronger than traders might have thought. Then we get to the 10-year notes and the others. Now, you are flirting, one eye closed, flirting with trying to get over a 20 reading. Any reading over 21 will tell me this market wants to get more of a correction. This is a market now into the resistance of the 100-day average in the green line at this point. Same thing going on? No, even more so. You have a 22 reading already. So if you stay like this, the short covering's probably hitting this market now. And you have to be at 22 on the close or higher, and that could carry the market even a bit higher than this. Maybe we've gotten to the point, and that's all I can say is maybe, in quotes, where the market's found itself overdone with adding too much yield back in the market. The dollar index is fighting a battle between the 100-day average in green. Generally, a market fails on the first, and I want to make this in quotes, Generally, I have discovered over time, markets fail on the first challenge of major moving averages and a Bollinger Band. And right now, I can't say it's failed. I can say it's stalled. You haven't added very much to it at this point, but you still have this bullish embedded reading going, which tells me the bulls are completely in control, and you may be going up here even more. I am not willing to be one that say, this is where the pros are doing something. I think they took their profit. I think they did it right here, and I think they're doing this tonight, scratching their beards going, should I get back in the market? Maybe it's going towards that 103.87, 104 zone. In the euro, it's clearer. You have a bearish picture. You got under. You stalled for a bit here. And I think, this is a great time to show you what I mean. Could have done it on the dollar index, but it's easier here. You come down, you went right into the 200-day average, the 100, and the Bollinger Band all at once, these couple of days right here. And then you went from day one of hitting the Bollinger Band, 2, 3, 4, 5. You were just bang, all the way through there, and that's the stall. Normally, I see the market turn and bounce. You weren't with an embedded reading. Then as time went by, the market starts doing, let me see where we're at. Here we are. I want to go forward. As time goes by, you start dropping even further here, and all of a sudden you have an embedded reading. So this tells me to expect hard selling back into this area as long as the red line, which is now at the number 1, which is at an extreme number, you get back up here. So the odds of this market just rallying smartly, it can be there, obviously, but there's probably willing sellers waiting for it. I've not recalled when I've seen a 1-point number on that, as I just showed you. In the British pound, now this is still bearish. This is the stall, and if the market wants to do anything, you may be headed back to the 129.56 level. I would throw in my bearish idea if the red line closed over 21, but without that, I have an objective in mind that you still can go down here. In Bitcoin, I don't know what to do with the market. Here's why. You went to the upper band, You fell to the 18-day average, neutralized, then you continued down to the lower band. You stopped there. So in essence, it was this move down, this move back up to the upper Bollinger Band, and now you're playing a game. But let me tell you what's getting bullish. Notice that the 18-day average is getting ready to crisscross on the 100. That's a bullish event taking place. So yes, it's overbought, but that's where I'm looking for the support to try to show itself. When we get to energy, how are you going to rally energy if you don't have China in the market doing something really constructive to convince the market that they're going to be in need of more oil? I'm not seeing that. So I think OPEC got it wrong. I think the IEA got it right. And that's what we're seeing. In fact, the IEA today came out again and they're lowering numbers. They don't like what they're seeing out of China still. And for that reason, I think that oil prices, they have no hurrah here, especially if Israel's not going to attack Iran. You see that in the WTI as well. You're taking down everything because it ran on the Chinese news and Israel. That news is the opposite way right now. Those traders are caught and the momentum's carrying the market down. Natural gas is, what did I tell you? You normally go up into August, September, and then you peak out. That's when you put the most in storage, and then all of a sudden the market generally, historically, falls in price. I'll catch you all in the morning. You have a good day. I'll have a lot to talk about at the evening update tomorrow. Take care.